Okay, we are live on YouTube. Let me start the meeting. Thank you, Ms. King.
Thank you. Welcome, everyone. It is 1:31 p.m. and I'd like to call to order TWIA's Actuarial and Underwriting Committee meeting. To get started, I'm going to turn it over to Mike Perkins, who will walk us through the antitrust statement and the potential conflict of interest statement. And please take roll for us, Mike.
Thank you very much, Ms. King. I'd like to welcome everyone to today's TWIA Actuarial Underwriting Committee meeting. It is a meeting of the TWIA Actuarial Underwriting Committee and may also include a quorum of the TWIA board. Thus, our antitrust statement will apply to the meeting. In this meeting today, the committee members include Debbie King, Tony Schrader, Georgia Neblett, David Futterlieb, Carice Morrison, and Stephen Alexander. The staff has determined that there is a topic or topics that will be discussed that require certain disclosures be made under statute. That topic is possible recommendations to the TWIA board concerning association retrofit and mitigation credits. The following disclosures are therefore made under the law. Ms. King is employed by a TWIA member insurer. Ms. Neblett is a TWIA policyholder. Mr. Futterlieb is employed by a TWIA member insurer. Ms. Morrison is employed by a TWIA member insurer that's affiliated with an agency that is paid commissions by TWIA. Mr. Alexander is a property casualty insurance consulting actuary. All of our committee members are present according to the online tool that we're able to view here on the computer screen, except that I've not seen Ms. Neblett just yet. And I'm sure she'll let us know if she's with us or when she is with us. But we do have a quorum and you're ready to proceed. I think there may be some comments from Ms. Donnelly, and then I think Ms. King, you're ready to get to business.
Thank you. Thank you,
Have a
Mike.
good meeting.
Christina, did you have comments at this point?
Yes, ma'am, I do. Thank you. Thank you for joining us for the TWIA Actuarial and Underwriting Committee meeting. My name is Christina Donnelly, and I'm the technology moderator today. I will also facilitate public comment during the designated period. Give me 1 second to advance my slides. Persons can attend this meeting in person at the TWIA office or virtually via Zoom. You may watch the meeting on YouTube as well. Public comment may be made at the TWIA office, or if you are logged in through Zoom, either via the internet or through a touch-tone telephone. You can find meeting materials, links to register for the Zoom meeting, or listen to the YouTube live stream at www.twia.org on our About Us page under Board Meetings. Before we move forward in the agenda, I have a few reminders to help things run smoothly today. If you are a committee or staff member participating in today's meeting, please mute your microphone when you are not speaking. Zoom will give you a pop-up reminder if you attempt to speak while muted. You should also turn off all other technology on your computer, as other open programs and devices may interfere with the functioning of the technology during the meeting. At this time, only members of the committee and association staff presenting to the committee has their microphones unmuted. If you're a registered attendee of the meeting, you will remain muted for now. If you're experiencing technical difficulties during the meeting, you may email meetings@twia.org and someone will attempt to assist you. Many participants will not be able to respond during the meeting to comments or questions emailed to this address. I will now turn the meeting back over to the committee chair. Thank you.
Thank you, Christina. I hope everyone's had a chance to review the minutes that were sent out prior to the meeting. Are there any changes or corrections to those minutes? Hearing none. Is there a motion to approve the minutes as written?
So moved. This is Carice.
Thank you, Carice. Is there a second? Someone? Can I second that, Mike?
Second.
Yes, ma'am, you can, but it sounds like you got one finally.
I got one from Tony. Okay, thanks.
Okay.
All in favor of approving the minutes as written? Please say
Aye. Aye.
thank you. Any opposed? The minutes are approved as written. Thank you. I'll now turn this back to Christina for public comment if you have any.
Yes, ma'am. Thank you. Before I provide the instructions for public comment, Jennifer will provide a summary of the written public comment received for this meeting.
Thank you. We received no public comment in writing for this meeting. We did receive one written testimony from someone that intends to give oral comments today, just before the meeting, which we will forward, but they do intend to speak today in public comment. So you will hear from them as well. But other than that, we received no written comments for this meeting.
Thank you. As a reminder, we can accept public comments from participants through 3 methods during today's actuarial and underwriting meeting. Participants must either be logged into Zoom through the internet or on a touch-tone phone or be present at the TWIA office location. Participants must click on the raise hand icon at the bottom of the Zoom control panel to indicate that they would like to make a public comment. The raise hand icon highlighted on the image on the screen shows how you can find and select this button. You may also indicate you wish to make public comment via your touch-tone telephone by pressing *9, then press *6 to activate your microphone when your name is called. If you're in person at the TWIA office, the TWIA staff on site will provide instructions. If you have clicked the hand raise icon, I will call your name and then unmute your audio so that you may give your public comment. The Zoom system will prompt you to unmute yourself. You will see your microphone icon become enabled to indicate your microphone is unmuted. At this time, we will start with state legislators, followed by those at the TWIA office location, and then lastly by those that are logged in through Zoom. You'll give me one moment to review the hand raises at this time. At this moment, I do not see any state legislators. I was also made aware earlier in the day at our TWIA office location that there were not any individuals present for public comment there. Amy or Mr. Perkins, can someone please confirm that that has not changed since we've opened the public comment period?
Correct.
Okay. Thank you very much. Okay, we're ready to begin the public comment for the Zoom individuals. The first person I'm calling on is Tom Tagliabue. Your microphone is now unmuted and you may make your public comment.
Okay, good afternoon. Can you hear me?
Yes.
Lovely, thank you. Chair King, committee members, my name is Tom Tagliabue. I'm a homeowner and policyholder in Corpus Christi. My husband and I own a 75-year-old all masonry home. We have 1 sheet of drywall in the entire home. Several years ago, we installed 4 roll-down shutters to protect 3 large windows and a set of French doors. In addition, we replaced about 20 casement windows with double pane impact resistant windows and invested in more than 25 sets of hurricane shutters for all of our windows and door openings. We replaced our garage door and reshingled our roof as well. All of these required a significant investment with not a single bit of credit from TWIA. We made it through Harvey and Hannah with no claims. Last week, we started looking at replacing an original wood door, exterior door, because of water damage at the bottom that was resulting in wood rot. Instead of being able to replace this 75-year-old wood door with another wood door, we're having to go spend 2 or 3 times as much to put in a fiberglass impact resistant door, which will require by wind code ripping out, demolishing the existing frame and an engineer to certify the new replacement frame and door, all of which are still protected by hurricane shutters. I'm told by my contractor that all wind code rated fiberglass and steel doors are smaller than conventional doors, which is why the frames have to be replaced. Again, none of those expenses exceed our deductible. So we're not making a claim. None of the money's coming out of TWIA's pockets. It's all coming out of our pocket. And for once, I'd like to get, as a policy holder, when we've invested in protective measures, I'd like some rate relief. Not only have we protected our largest investment, but we've saved TWIA policyholders and member companies thousands in cost avoidance. And all we're asking is some tangible rate relief when we invest in our properties. Thank you.
Thank you for your public comment. Is there anyone else who wishes to make a public comment? Okay, just a moment. Okay, the next person I'm calling on is Terlyn Tarleton. Your microphone is now unmuted and you may make public comment.
Hi, my name is Terlyn Tarleton Shannon, and I'm representing the Coastal Windstorm Insurance Coalition. And also I'm an independent agent who writes windstorm through Texas Windstorm. There's a couple of items that I'd like to discuss. One of them is, I love what Tom said, because it's exactly, he hits it right on the nail. So thank you, Tom, for making those comments, because that is so true. I hate seeing so many customers go where they don't get anything and they have to pay a lot of out of pocket, and it happens quite frequently with items like you're stating. But one of the things that I'd like to see is we have a builder that's on the East End that builds fortified homes. They invest so much more into these homes to make them safer, not only for the fire, but also for wind and storm losses. And because of that, their selling is like 1.2 million, 2 million. You get the same square footage for a house on the other side of the island that would be half, or I mean, probably like 300,000. So for them to do that and to make those homes safer, they really should get a better discount on their policy, not just the building code credit, but also there should be something where they can have an additional credit for building to those standards, and that would help bring the premium down. Because I've been through several storms with them, and usually those houses do not have very much damage, if they have any at all. The other thing too is there is a town center that they have. It's a 5-story building. It's concrete pilings. It has concrete on the first and second floor. The third, fourth, and fifth floor have some wood supports, but they cannot get any type of ISO rating at all for their building. So therefore the premiums are extremely expensive, and that building is not going to go anywhere. So I'd like to submit that too we got the ISO rating for that building and the documentation to show that, because I think consideration should be made for people who do put more into the buildings, but maybe didn't finish it all the way out because of the expense. The other thing I wanted to state too was, I don't know if y'all know this, and maybe y'all talked about it in the past, but when you quote through Texas Windstorm on a policy, I'll give you an example right now. I quoted 700,000 on the house and 100,000 on contents, and the total premium came out to $5,230. That's with a 2% deductible. But the same exact quote that I did through Texas Fair Plan, and it has more coverage and it has more content coverage. Content coverage is 391,000. Other structures, you get 78,000. Loss of use, 78,000. Liability at 300, and med at 5. That total premium is $2,533.77. I don't get that. That's about a $2,600 difference. And I see this all the time, going in there and then quoting with Texas Windstorm. I also noticed that the cost estimators are not the same. So I think y'all also need to look at that too, because I don't understand the huge rate difference between Fair Plan and with Texas Windstorm. It's cheaper to do the wind with Fair Plan than it is with Texas Windstorm. So I do think that needs to be looked into. So that's really all the comments that I wanted to make today. Thank you very much.
Thank you for your public comment. Is there anyone else who wishes to make public comment? Seeing none, I want to thank everyone for their participation. I will now turn the meeting back over to the committee chair. Thank you.
Thank you. Thank you to everyone that commented today. We appreciate hearing from you. Just do a little overview, I guess, of why we're meeting today. And we have been asked to review some analysis that's been done by Jim Murphy and Shu Lee on potential credits. Our goal for the day is to listen to their analysis and recommendations and decide if there's any of these credits that we would like to move forward with a recommendation to the board to pursue. We don't necessarily have to decide that we want to do it, but we want to pursue it, meaning we want to know more. And so, because there would be more work to be done on any of these credits before we would actually implement them. So that's our goal for the day. Does anyone have any comments on that before I turn it over to Jim Murphy? Okay, so Jim, can you please take us through the analysis that you did?
Thank you, Debbie. I'm happy to. I think on the next slide, there's a quick table of contents of kind of all of the different items that I have materials and I'm prepared to discuss with the committee. This is just following the order of the agenda for today. So I think if we want to just really quick, I can give you an update on the secondary modifiers. On the next slide, there's just some basic information. We issued an RFI on the secondary modifiers, sorry, 2 slides away, earlier this year, looking for vendors who could help us identify more of the secondary modifiers used in the catastrophe models. There was a lot of conversation on getting more accurate exposure information last year, and you know, we're still pursuing that. We identified a lot of variables that we can include and we have since include in our catastrophe modeling, but there's still more. So we received 6 responses. We additionally had some referrals from interested parties that pointed us toward vendors that might be able to help us out. We are kind of reviewing all the information that we've received, trying to make sure that we have enough information to make informed decisions. This is still an ongoing process, so I just wanted to update the committee. I think that this is probably a project that it makes sense to collaborate with the consultant that we may be bringing in to help us with our catastrophe modeling. I think having someone who is an expert in that field to help us prioritize, you know, which pieces of data may be more valuable to us, may have greater impact on the models by their inclusion, will certainly help when we get down to discussions on, you know, actually paying money to get additional information from a third party as part of our process. So that's kind of where we are on that project. And I'll just pause here. If anyone has any questions, I'm happy to answer them before moving on to the next topic. If not, then we can move on to the next slide. So the existing building code credits, and we can flip it again. Basically, we have existing building code credits. They've been on the books for a long time now, offering credits for new construction built to specific building codes in specific areas. What we did is we kind of looked at the amounts of the credits that we currently offer at a fairly high level. I tend to call it a preliminary review to see if what we are providing in the form of a premium discount is appropriate still. You can see on the screen, it's a little bit of a small number, but certainly you have this in your materials. The credits vary based on how close you are to the water, how strong the building codes are, how new the building codes are, anywhere from 0% to 33%. So potentially a structure can actually save 1/3 of their premium just on the basis of the building code. It's not shown on the chart here, but just something to keep in mind. It does say the windstorm resistant construction code was effective in 1998 for new construction. Beginning at that point, the International Residential Code was effective for structures in 2003. So that one's been on the books for a little bit longer. Moving on to the next slide, we can kind of see a summary of the analysis that we did. Oh, I got ahead of myself. On the next slide, you can see the summary of our current distribution of enforced risks. Probably important to keep in mind when we start talking about the building code credits, what percentage of our residential policies actually qualify for these. As you can see, 22% of our residential risks qualify for the building code credits associated with the newest building codes, the IRC, IBC codes. Another 6% qualify for that older group of codes, and then 72% of our residential risks actually don't qualify for building code credits under the existing codes for new construction. So that 72% are homes that were originally constructed prior to 1998. or homes that are eligible for TWIA coverage through one of the WPIA waiver programs, allowing them to get coverage from us without having all of the certificates of compliance. Not having those certificates means that they don't qualify for the building code credits, but they still can get insurance from us. So just to keep in mind there that 20% is the newer codes, a little over 5% is those older codes that get the credits, and then just over 70% are not receiving a credit at all. And that's important when we look at the next slide, which is the summary of our analysis. So we took these building codes and we looked at how they actually performed in some recent storms. We looked at Hurricane Harvey back in 2017, and the three of the four storms that we had last year, Hannah, Laura, and Delta. We looked at claim frequency, how likely were they to have a claim, claim severity, if they did have a claim, how big was it, and then the loss ratios. And I think it's important to emphasize that part of it, because that really incorporates both the claim frequency and the claim severity, and it also incorporates the existing credits. We charged them a premium that we felt was reflective of the reduced exposure based on the building codes. And so in a perfect world, if the credits that we offered for these building codes exactly lined up with our actual experience in these four storms, all of the loss ratios that we see on the graph below would have been exactly 1. So that's kind of the baseline. As you can see down below, the IRC and IBC codes on the left are all less than 1. So they this is a loss ratio, so low is good. They performed better than we would have otherwise expected. Three of the four storms, the WRC codes performed poorer than we would have expected. They're above that 1. They actually did better for Hannah, but not for the other 3. And then for the 72% of our policies that don't receive these building code credits, they're all pretty much right about 1. And so, which is what we would expect. The policies that are receiving you may think of it as our unadjusted rate, were pretty much right where we would want them to be. But it does appear that at least based on these 4 storms, there may be some room to increase the credits for the IRC and IBC building codes. The flip side of that is it also appears that we may be offering too much of a credit for the WRC building code. And so this is the end results that I wanted to share with the committee. As a result of our preliminary analysis, there actually may be a case to be made that we should take the time and do a comprehensive actuarial review of these credits for more than just these 4 storms, but incorporating modeled hurricane losses to try and get a broad spectrum of possible catastrophe activity, to look at non-catastrophe losses, to actually calculate what we think the correct credits would be. And so to see exactly how much of a change that might be. And then also, anytime we have these kinds of conversations, we have to keep in mind that if we are increasing the total amount of credits that we're offering, that there needs to be an offsetting change in our base rates to keep that total impact rate neutral. So there is definitely the possibility that if we were to increase the credits for the IRC, IBC risks, that the none or prior group might have to go up a little bit to balance that out. And certainly that would be offset by the fact that the WRC building credits might be going down. But there's obviously actuarially methods to keep everything neutral, so that at the end of the day, the overall rate is unchanged, but it would definitely be changed for these specific groups of policyholders. And of course, something else just to keep in mind is a full-blown analysis would require us to do some modeling in our current environment. The modeling results are no longer being provided by our reinsurance broker, so that would come at some expense to the association. And then if we did choose to make a change to the building code credits at some point in the future, there are obviously systems implementation costs that go along with that. So I'll pause here. I think that's a lot of information all at once. I wanted to see if anyone has any questions or would like me to kind of delve into anything a little bit further. If not, I'll keep going. The next topic on the agenda is roof age. And it has come up in the past that, we don't currently offer any kind of rating factor to reflect the age of the roof on a policy. So we took a look at it. The first step was just kind of get a feel for where our book is. And as one might expect, most roofs are comp shingle roofs. Those roofs have a 20, 30-year usable life. So if we break the average age of our roofs into little buckets, it's fairly evenly split. So I think that this is reassuring in that, we aren't disproportionately insuring old roofs or new roofs, which might indicate that something is off outside of this. But, there's a 11 to 15 bucket is a little bit bigger than the others. That's about how old the Ike roofs are going to be these days. So that's to be expected. And obviously the 19 and the newest bucket, the 0 to 5 years, that would reflect the roofs that have been replaced since Hurricane Harvey. So this isn't terribly surprising. It's good to look at, but I think we can keep in mind that at least for the roofs, unlike the building codes, it's fairly evenly split across the buckets. So on the next slide, we have a summary. We did the exact same analysis, just varying it by those 5-year roof age buckets instead of building codes. Looked at the same hurricanes, looked at the same metrics. Again, if we didn't need this factor at all, we would expect all of the bars to be about 1. But that's not what we see. We see that it's very clear. Brand new roofs, ages 0 to 5, the loss ratio was much, much lower in comparison to older roofs. And it's with the exception of Hurricane Harvey, which looks like it kind of bounces around a little bit. For the other 3 storms, it just very continuously increases as you get older. So this is consistent, I think, with what we would expect with standard industry practice. A lot of companies have some sort of rating factor that incorporates the age of the roof. Newer roofs are less subject to damage. Older roofs are more subject to damage. I think that's fairly accepted. So I think that you could absolutely make a case that we should incorporate this into our rates. It would result in rates that were more accurate, that more appropriately reflected the risk of the property being insured. But it would, kind of as before, there would be an offset offering a decrease in premium, a credit to brand new roofs has to come at an increased cost to older roofs. And so in order to make the impact of this rate neutral, there would have to be groups of policyholders that saw their premiums go up to offset the policyholders whose premiums were going down. Another way to think of this is everyone is currently being charged an average roof age rate. And so if we wanted to incorporate a specific roof age rate, then that would cause the premiums to go up and down as a result. And again, this is just presented as a preliminary analysis. We can absolutely, if it is the desire of the committee and the board to do a full-blown actuarial indication and come up with actual factors that we could use to adjust our rates accordingly. Again, that would probably involve modeling just to make sure that we see a full possible outcomes of the different size storms at different size locations. I think that that would also, this would actually involve a little bit more of an implementation cost for the association than the building code credits. We already have credits in our rating algorithms. All we would be doing would be changing the numbers. This is incorporating a new element into the algorithms. And so it's potentially new data capture. It's programming the logic to incorporate it, to test it, make sure it works properly. So a little bit more of a project for us, but certainly something that we would want to do if the board wants us to do it. Any questions on this topic?
I have a couple questions for you, Jim.
Yes, ma'am.
On this, so we just use these 4 storms, and so it's not a lot of data, right? Well, Harvey might be, but my question or my thought might be that, did you look at new roofs by the age of the home? So when we have a new roof 0 to 5, is that like 80 or 90% new homes? So in other words, are we kind of like, are we confusing, or maybe not clear what's the roof age versus maybe the building code? Mm-hmm. So I'm just wondering, how would you go about teasing that out to be sure it's like not a building code upgrade versus a roof? And the second question on top of that, when you get a new roof, does the building code of the roof change? Like, does that mean that you get tie downs or whatever happens that make the roof, like the roof integrity go, it's not just putting on shingles, it's actually improving the way the roof's constructed? I don't know. I mean, maybe you can answer both if you can. Just curious.
I can certainly try to answer both.
Okay.
The first one I can definitely answer. Yeah, we did not adjust for any other factors. And so you were absolutely correct. Some of the homes that we are showing as having new roofs are also getting that new building code discount. And so there is definitely some overlap between the results that we see on this slide and that we saw on the prior slide. We would need to take that into account. Even if we only decided to pursue one of these and not the other, the correlation between the two, we would want to make sure and we were handling appropriately. I think, Debbie, as you know, that if you just look at each individual rating factor in a silo, sometimes you can kind of double count the results. And so we would want to absolutely take that into account when we did our comprehensive review. For your second question, I think that yes, anytime that there's a repair or a remodel or an addition, that change needs to be certified as being in compliance with the current building code. And so to the extent that there is work done on a house, that work has to be done in compliance with the current code. It would depend on exactly what's being repaired, what's being replaced, how far down they're going on the roof. But that is kind of part of the point of this, is that newer roofs are in effect, for the most part, upgrading that portion of the structure to a newer code, to a more wind protected state.
Okay, thank you for that.
Sure.
Any other questions that anyone has?
Yeah, Jen, this is Corey Morris. Just kind of circling back to what Debbie's question was on the first question. So is that saying that there could be homes, for example, in this chart here that are 15 years and beyond? That's the age of the home, but the roof could be newer. We just don't know that because we looked at it based on the age of the home, not particularly the age specific to the roof. Or did I misunderstand that?
So I think that it's just the opposite of that. I believe that we are correctly capturing the age of the roof. We looked at both the data that we get on the applications and also the WPI8 database. And so it very clearly shows on the WPI8s if it's marked as a re-roof. And it even distinguishes between a partial re-roof and a complete re-roof. For this purpose, I was only looking at complete re-roofs. And so where there was a WPA8 that was more recent than the original construction of the home, I was using that as the age of the roof. So I think that anything that says 16 to 20 should be 16 to 20 based on all the information that's available to us. I think what Debbie was talking about is maybe more in the 6 to 10 range. Some of those 6 to 10s are homes that are 6 to 10 years old that still have their original roofs, and some of those are homes that are 50 years old that just replaced their roof 6 to 10 years ago.
Okay, thanks for that clarification. And then, I don't know, just relatively from when we talk about newer roofs and what the definition of a new roof is that, where does that sit on this scale? Is it 0 to 5 from your
Yes.
right? Just want to make sure that I have that clarity as well. Okay, thank you.
You're welcome. And of course, I should point out that most of our roofs are comp shingle. It's kind of the standard in Texas, but there are obviously other kinds of roofs. And if we were going to implement something like this, we would want to take that into account as well. A metal roof, for example, has a much longer usable life than comp shingles, and so it won't age as quickly.
And just one more thought. One more comment here. This is something that's ever changing because people put new roofs on, as we heard from our commenter today. So we would have to be diligent about keeping the data current. I think you said we do that, right, with the WPI8s, that we keep this current. So that's already being addressed, or it's already being done.
So it is being done to an extent. Anytime there's a change on an existing home that we already insure, we need to have the WPI8s on that. Obviously, that anytime you make something a rating factor where the price changes as a result of it, the agents are going to have an incentive to provide their client, our policyholder, the most appropriate premium discounts. And so they'll want to make sure that they accurately reflect any roofs that have been replaced.
Okay.
All right, if there's no other questions, then we can move on to the next topic. It's a little bit of a quicker one. There was some discussion at prior meetings about whether or not there were homes that were eligible for the retrofit credits that weren't actually receiving it. And so we did some work on that. And just as a quick reminder, the retrofit credit is 10% of the premium, and homes that were built prior to 1998. So they're not otherwise eligible for those WRC or IRC building codes that we saw up above. Those homes can get the 10% credit if the exterior openings are upgraded to meet the newer building codes, the WRC or the IRC IBC standards. We looked into the TDI WPI8 database, the WPI8C database that TWIA maintained when we were issuing those certificates. There's a lot. I wanted to report on this because it's a big number. There's over 1 million records in both of those databases. It's just a lot of information out there. But we matched them up to the policies that we currently insure by the location, and there are just over 1,000 policies, residential policies that TWIA currently insures that gets this 10% retrofit credit. And we found 30 locations where the WPI8 itself had retrofit on it. There's actually a separate box that the engineer, the inspector can check for retrofits. And so there's 30 of those that we're pretty sure may be eligible for this credit. There's another 55 where we found WPI8s showing that at least some of the windows and doors on the structure had been replaced. It didn't say all windows or all doors, and so we're not sure if it was just one side or if it was everything. Some additional investigation is warranted to see if those structures are actually eligible or not. But 55 is I think was a pleasantly low number. It shows that agents are doing a pretty good job of marking the credit where the home is eligible for it. And just as a next step, we already had some conversations with Underwriting. We're going to work with them to give them all the information that they need so that they can reach out to the agents, and where additional information is required, get it, just to make sure that anyone who does actually qualify for this credit will get it. So I think that it was good to go through this exercise. It was good that we didn't find a large number of policyholders who aren't receiving a credit that they may be eligible for, and we can certainly track down these 85 that we found and make sure that they're rated correctly. Any questions on this topic?
Yeah, Jim, this is Steve Alexander.
Yes, sir.
You mentioned 1 million records. Does that mean that there's a lot of those records are for homes that are no longer insured by TWIA?
That is correct, yes. And there's also multiple records. Older homes may have had a lot of different repairs or additions over time. And so there can be literally dozens of certificates for a single structure in the database.
Jim, I have another question. I don't know if this is the proper time to raise it, but I'm wondering if you could respond to the first public comment about all of the mitigation that was done on that individual's home, and he claimed that he did not receive any additional credits.
So I think I can respond to it certainly in a qualified manner. I'm not familiar with that particular instance. I don't know any of the details of the situation, and so I don't feel like I could respond directly to him and his home without knowing more. But I can tell you that the 10% retrofit credit is the only building code credit that we offer outside of new construction, and that it does require all exterior openings to be upgraded. And the specific details of what's required and what's not, I think, tends to require more technical expertise than I have as far as interpreting the building codes and how they are implemented. But I mean, it's certainly possible that if a home in general upgraded almost everything then they still wouldn't qualify for this 10% retrofit credit because it requires everything to be upgraded within the terms of the opening protections. I think the next topic that we had on our agenda is probably going to cover that territory a little bit too. And so I think that we can continue to address that topic on the next item, unless there's more questions on this particular item.
Jimmy, I guess there was no loss ratios with this because it's just so few policies.
Well, and we weren't looking to reprice anything. This was merely just trying to see if any homes had fallen through the cracks. If someone had done all the work that they needed to do to qualify for this credit without actually getting the discount.
Okay.
This is a situation where really I think the agents and the policyholders are going to know more than we do. And so we do tend to rely on them to tell us when they qualify. And so I think that's why we didn't find many where we could see from our end. It looked like they qualified, but they weren't getting the credit.
Okay.
So the last topic that I was prepared to present material on today is the comparison of mitigation discounts. Mr. Alexander, you had asked this be added to the list, and I think it was definitely worthwhile for us to go through the exercise. We looked at two of the larger wind pools, at least on the Gulf Coast, Florida citizens and Louisiana citizens, although the conversation in Louisiana kind of switched focus once we started looking at it. And then we looked at 4 of the large national private carriers that write a lot of business in Texas. So just as a quick summary, in your materials, there's a lot of detail that I stuck in there just so that you could have that for reference. But at a high level, Florida really has a very detailed combination of construction features that can result in wind mitigation credits. They actually, this is a statutory requirement in Florida. Companies have to either use like the base wind mitigation credits or file their own. There's no option to not have them. And they are very detailed. They look at a lot of different things. All of the different components of the building code in Texas that we have that in aggregate roll up to that one big up to 33% building code credit. Florida tends to do piecemeal. And so if you just do one and not the other, you can still get a smaller credit. And I think that is something that might be of interest to this committee, to the board, if we wanted to expand the possibilities for retrofit credits. I think that the public commenter today mentioned installing shutters on their windows. That's something that is a very common credit in Florida. A lot of people have shutters, something that a lot of policyholders could do. And I think that if we were to do an actuarial analysis on those shutters, I can easily see that we could get an indicated discount for that. And so that's definitely one area that Florida does something that we may want to consider doing ourselves. I would caution that it might make the most sense to just do it on a retrofit basis rather than on a new construction basis. Because I can recall many years ago when Florida started doing this, there wasn't any data. And so companies really struggled with the amounts of the credits. Homeowners struggled with trying to show that they qualify for the credits. There's actually a sizable database of information today in Florida. There are a lot of inspection companies that actually go out to people's homes. The policyholder pays the inspection company. I think it tends to run $100, $200 for an inspection on their home, and they get a certificate that lists all of the wind mitigation discounts that they may apply, and then they provide that to the homeowners company when they apply for insurance. And so there's a lot of administration that goes along with documenting all of the individual things that a home may have or may not have, that I don't know if we necessarily want to jump wholeheartedly into that kind of process, but certainly taking the best of what they have and applying it to our situation and just offering smaller retrofit credits for individual actions that a policyholder might reasonably undertake, I think might be something that we would be interested in. Looking at Louisiana, Louisiana citizens, I didn't see offered anything that was terribly novel or worth us talking a lot about, but the state of Louisiana actually does have several publicly funded programs to provide incentives to homeowners to install wind mitigation. They offer tax deductions and actually tax credits in different scenarios for installing wind mitigation devices. So again, the shutters or impact resistant windows and doors, that sort of thing. The state is actually involved in that in Louisiana, which is something that we've had some kind of conversations about it at different levels with regard to TWIA, but obviously it's nothing that is in our direct control. And then looking at the private carriers, I wanted to point out that State Farm was the only carrier that we looked at that actually had a discount for having WPI8s. They call it complying with the building codes, and it's a 5% discount. So I think that anecdotally, I'd known for a few years that State Farm did offer a discount for a policy that had WPI8s, but I had no idea of the amount, and was a little bit surprised that it is only 5%. Again, compared to the 20s and 30s that we were seeing on our rate manual before. The other carriers don't really have anything specific to the building codes, but they have rating factors that are intentionally obscure. They're trying to protect the proprietary nature of their rating algorithms, but they tend to look at roof type and roof age. And so the same kinds of things that we were talking about earlier as potentially looking at for TWA rating tends to be the case for most of the big companies that we've seen. That's how they're incorporating this into their rates. And I believe that is the end of my prepared remarks. Again, I'm happy to answer questions on this topic or any of the earlier topics, or to provide any additional information that would be helpful to you.
Mr. Walenta, I see that your hand is up.
Yes, I appreciate that. On the State Farm that you're referencing here, is that State Farm, or does that include that new surplus lines carrier that they brought in to specifically write windstorm on the coast?
I believe that we were not looking at a surplus carrier, so I'm thinking most likely State Farm Lloyd's, but I can go back and double check that if it's necessary. Rate filings in Texas are publicly available if you know how to find them. And companies tend to only file the changes that are actually changing. And so trying to rebuild a manual from scratch involves going back many years through different rate filings. And so it's hard to get something that's comprehensive and easy to miss something here or there. But based on the information that we have, I think they're their normal carrier.
Well, it's a new entrant into the market. It's like 60 days. So
then definitely no. I think we did this analysis particularly probably a couple of months ago, so I don't think that we would have caught it.
Okay.
Debbie, this is Corey. It's just one other question, Jim, on the summary about what the state of Louisiana offers. Again, just for clarity, that's not limited to Louisiana citizens, though. Is that right?
That is correct.
For all property owners, right? These credits that there's available to them. It's not specific to their citizens program. Thank you.
That is, yeah.
Jim, Steve Alexander. Is it fair to say that the majority of homes insured by TWIA are older homes that do not have any mitigation features?
So absolutely to the older homes, that we saw in that earlier slide, 70% of them don't qualify for the discount. That can roughly be translated to 70% of our homes were built prior to 98. So, they're 20, 25 years old or more. As far as the wind mitigations, I think that's one of those things where we will know if they've replaced all of their exterior openings because they can ask for a discount and we'll give it to them. We may not necessarily know if they've only replaced a few things. They certainly should have gotten a WPI8 for any of those improvements, and it will be in the database, but it's not something that we necessarily keep track of in our policy administration system. We just make sure that they have all of the 8s that they need, but we don't have a good organized record of, for example, who has shutters and who doesn't. It can be found out, but it's not something that we maintain.
It seems to me that there's an issue there with the older homes and only giving a 10% credit. And it also seems to me that you could give additional credits for those homes and not require rate increases for everybody else. Is that correct?
So Could it be done? Of course. I mean, a filing could be made that way. I think that the actual exposure that we have wouldn't be changing. If these homes already have wind mitigation, then we are already seeing the reduction in losses as a result of those wind mitigation devices now. And so it's already incorporated in our overall rate indications. I think that more providing the homes that have better wind protection discounts, I think would therefore, it would need us to offset that. Kind of like to my comment before, we're giving everybody the average wind mitigation rate right now. And so if we were going to actually vary the rates on that and give the people who have installed wind mitigation protection a reduced rate as a result of their lower exposure to loss, then those who have not done that, I think should, in fairness, get a higher rate because of their increased exposure.
But I think that almost all the people, all the homes, the older homes have not installed any wind mitigation features. Isn't that correct? You don't have very many homes, older homes that already have wind mitigation features. I think you said it was like 6%, correct?
So the 6% figure that I mentioned, those are homes that are certified as new construction built to the WRC code. And I apologize, I'm using older and newer and building codes probably in a less than precise manner. That is the older of the two building codes for which you can get a building code credit. That's effective for new construction between 98 and 2003. So it's just a slice of our book of business. The 70% of the homes that do not get building code credits, the vast majority of those were built prior to 98. And those are the homes for which we don't have an active record of whether or not they may have made some improvements on a case-by-case basis to their wind mitigation.
So I'm still trying to understand why, if a homeowner who has a home that was built 50 years ago does wind mitigation, installs shutters, reinforces his roof. First of all, why he wouldn't get a bigger credit than 10%. And second of all, why other policyholders' rates would have to be raised.
So the 10% credit is just a credit that we have had since the WP8 building code credits were first implemented. I think that it is very reasonable for us to take a look at that 10% and to see if the amount of that 10% should change. That is a very narrowly defined credit that only applies if you've upgraded all of the exterior openings in a home. I think that it would also make sense for us to explore other additional retrofit credits to incorporate roofs or incorporate some of the exterior opening protections or some of the other things that you can do to make your home more resistant to wind damage. I think those are definitely good avenues for us to explore. My point was merely that we don't currently have those additional credits available or that rating factor for the age of the roof. And so the average is already incorporated into our rates. Certainly a new customer who comes in or someone who hasn't had it that installs shutters, they are reducing their exposure. And I agree it is very reasonable for them to pay less. The point of my comments is more the existing book, the homes that have been with us, that have gone through these storms with us, their loss experience is reflected in our actuarial indications. And so their current level of wind mitigation protection is reflected in the overall indications. And so if we were to vary the rates by wind mitigation, then I think that there would have to be an offset.
So I think this is a really big issue. I think this is what we ought to focus on. These older homes that do not have any mitigation features that are probably causing most of the losses when a major hurricane hits. This is where I think we should be focusing our efforts.
Steve, could you explain that a little? Focus our efforts, what, to provide credits, or what? Focus our efforts.
Yeah,
on
I think we should be promoting wind mitigation on these older homes. I think we should be having seminars. We should be having wind mitigation demonstration homes. We should be doing everything we can to encourage these people that have older homes to mitigate. And I think we really should be looking into larger credits. If you look at other states, they're giving much larger credits on these older homes for doing these individual things like secondary water resistance, roof to wall connection, roof covering, roof to deck attachments. They're looking at all these things individually and trying to encourage policyholders with older homes to mitigate their homes. This is going to have a major impact on the cost of reinsurance and the total losses when these big storms hit.
Yeah, I would agree. Yeah. And that actually, to the extent that people do make those improvements, that actually does help with the rate indication as well. Lowers our reinsurance cost, which lowers the indication, as you said.
Yes, thank you, Debbie.
Mm-hmm. Yeah.
For y'all's information, insurancejournal.com has an article today discussing and detailing what Florida Citizens is doing regarding inspection of their policyholder base, that they're getting ready to inspect 9% every year, and they're going to spend like $45 million on inspection costs, just for your information.
For what purpose, Ron? I forgot. I didn't hear that in the beginning. What's the purpose of the inspection?
Well, Florida Citizens is getting flooded with new policyholders. And so they're making a huge effort to inspect. And the article is very detailed. So insurancejournal.com has a very good article about what they're doing to start addressing inspection issues.
Thank you for that. Jim, did you have more to present, or you were going to just focus on these 4 things, or were you going to show us any components of the wind mitigation credits, or we could do that later? But like what would be some of the factors? What, not factors, but what are components of a wind mitigation credits?
So I think that I didn't have anything specifically planned to show you. I think that, yeah, certainly, Steve mentioned a lot of the structural elements that Florida has credits for. I think, one that he didn't mention that might be, that I know that we already have this data is the shape of the roof.
Shape of the roof.
Versus gable roofs, there can be a big difference in experience. And that's information that we're currently getting from our Eagle View vendor. So something that we might be able to work with fairly easily.
So your thought, going back to your comment, Jim, is that these wind mitigation discounts would be primarily for the older homes, or that 72% is not getting a building code credit. Would that work well? I'm trying to think that through. It may or may not work well of keeping the building code credits, and those might need to be looked at as well, just to be sure that the two like mesh up if you're going to combine the two.
Mm-hmm. I think that, there's certainly a difference between someone who upgraded a particular facet of their home to the current building code in 1999 versus someone who did it in 2019. The codes have changed a lot in those 20 years. And so
that's true.
That's the only requirement that we have on our books, is that any improvements have to be made compliant with the building code that's current at the time that they were made. So, certainly a home that's installing new retrofit measures today will get more benefit from it than someone who had installed them under a more lenient code many years ago.
Would it be safe to say the wind mitigation discounts that we're discussing kind of roll in everything you presented today? the retrofit credit would be then replaced with this, right? I mean, it would be the retrofit credit we have today would then become part of wind mitigation discounts. Would that be right? And
So I think that there's obviously a lot of different ways we can go with this. We could create something that was very detailed and very comprehensive like Florida has. I think there would just be a lot of cost, a lot of administrative work, documenting that, getting homes inspected to prove it. I think that another route would be to maybe take smaller steps and build over time up to something like that. I think that there are. I keep using shutters as my example, and I probably should disclose that I have no conflicts of interest with any shutter installation companies, but that's just something that is accessible to a lot of policyholders and makes sense, and they can see it and touch it, and it's a little bit easier to talk about that than the size of the bolts connecting the roof to the structure of the home or the foundation, and so. Starting with something that a homeowner could say, if I do this, then I save money on my insurance, I think makes sense. And certainly to Steve's point about getting the word out and encouraging people to do this, that something that they can touch and feel is probably going to have a little bit better take up rate than something that's hidden inside the structure.
Good point.
Let me ask also, if I can, Debbie, real quickly. So Jim, everything you've presented here today, also in addition to I appreciate what you're saying about the shutters, and that is something that's easier, certainly for our policyholders to have access to and install personally and whatnot. But let me ask this from this point of view, from our exposure perspective or from a policyholder discount perspective, what would be more meaningful of all of these that you've presented? Do you have any idea on that?
I don't have a strong sense right now. I think that one of the first steps in however we decide to proceed, assuming we proceed at all, is going to be to try and quantify this stuff. And I think that it basically involves looking at the impact of the various secondary modifiers within the models. And could potentially involve successive model runs, just changing one or two things and seeing how that impacts the results to really get a good sense of where do you get the most bang for your buck, so to speak. Exterior openings, we have the retrofit credit for replacing them all, but even replacing just one window marginally improves your home's ability to withstand an event. And so impact resistant opening protection is another big one, and that's slightly different than the shutters. The shutters just cover up the windows, but if the windows themselves are better able to withstand windborne debris, then that's a big plus.
Jim, Steve Alexander.
Debbie, it's Mike Garrett. I have a question, just whenever
Sure.
I can, please.
Yeah, go ahead, Mike. And then we'll get to Steve.
And I guess I agree with what Steve and Jim and everybody's saying as it relates to credits. I'm always been a proponent of it, but I think maybe we can't lose sight of the change in the portfolio with something like this and the impact on policyholders that cannot, for whatever reason, get the upgrades to their houses to get the discounts. So the more people that do that, obviously is good for the overall indication and all of that, but there will be people that will then pay more as a result of that. And it's just part of it. And I don't know how you deal with that. I wish there was a way that there could be grants or something like that for these older homes to get the upgrades. But if not, it's going to be kind of like the takeout companies that are coming in and picking off the better quality homes, in their opinion, and coming out of TWIA, that is going to hurt our experience, because those are the ones that are not with us anymore that was helping stabilize the experience, for lack of a better term. So that's just more of a general comment.
Yeah, it's very true. I mean, that's something maybe the board could address in some way, some ideas. But Mike, what you say is very true. There will be people that can't do it
Yeah, Debbie and Jim, this is Steve Alexander again. I think the opening protection, the shutters would probably be the number one thing, and also the least expensive thing or mitigation feature that could be implemented at the lowest cost. It would have the biggest effect with the lowest cost.
Mm-hmm. So when we have a new modeling firm under contract after, I guess, our couple months down the road, we could ask for some of the, we'd have a better idea, right, Jim, what would make the biggest difference. I mean, we could pursue that maybe through the model work. We got a little preview of that, I guess, from our work last year with Willis, or I guess it was this year. And we did focus on the opening protection, as everyone knows. That was one of the big factors, but there were some others as well. And maybe not quite as big, but still that make a difference. Shutters are very common. I know in all the wind mitigation programs I've seen. Shape of the roof is another one, which is anyone has to do. It just is, right? Probably the way their house was built. So, okay. Well, any other thoughts or questions, I guess, at this point?
So I think we need some kind of a motion around opening protection and charging Jim or TWIA with doing more research on that to find out what the potential costs would be, what the benefits would be, what the payback period would be for, say, an older home installing various forms of opening protection.
Steve, do you want to make that opening protection specific, or wind mitigation, open it up to other?
I like Jim's idea of taking it a step at a time.
Okay.
To actually adopt the Florida program would be very expensive. But I think there's some incremental steps that we could take that would move us in the right direction. My recommendation would be to focus on the older homes and look at alternative opening protection and how much these alternative opening protections would cost, and what potential discounts we should be offering, and what the payback periods would be. And possibly look at also some form of state or federal assistance to help people implement these programs.
And today, the 10% isn't that for opening protection that we have, Jim? Is that right?
So it is, but it requires you to have upgraded all exterior openings to qualify for it.
Okay.
And so someone who has only upgraded their windows but not their doors, for example, wouldn't qualify for it.
I see. Okay. So, Steve, do you want to make a motion, or was that a motion that you made?
Yes, I'll make the motion to charge TWIA with doing further study of alternative opening protections, focusing on older homes primarily, looking at what the cost of alternative opening protections would be, what the potential savings would be, and what the potential payback periods would be, and also investigating any potential state, federal, or local assistance that could be used to reduce costs for policyholders.
And if I can ask for clarity, Stephen, Steve, that's to reduce the cost to policyholders is for the purchase and installation of those shutters, right? Or those protections, excuse me.
Correct.
Yeah.
Okay. Is there a second on that? No, from anyone?
Yeah, this is Corey, so I'll second.
Okay. So I just want to open it up for discussion before we vote. Does anyone have any questions around this of what we're actually proposing or any other thoughts?
I do have a quick question. It seems like an awfully sort of broad motion, if you will. And I wonder, and this is a question because I'm not sure, but does it overstep the bounds of what TWIA is here to do in the sense of pursuing state level opportunities to offset the cost of homeowners mitigating their houses?
David, that's why I was hesitant to the second. It was because of that last part of it. I don't know how our staff can go about. Well, first off, Debbie, this comes from us now and goes to the board first, right? So there's nothing that's no action comes from our vote today. Right?
True. This is a
board to approve for this.
Yeah.
To do the research, right?
Correct. This would be a recommendation to the board to pursue this, not necessarily that we say we're not really voting that we are our stamp of approval right now. We're saying we want to pursue this avenue.
Yeah, so with that, that's why then ultimately I decided to second, because I thought, well, it's just going to the board. And then ultimately, this is just for staff to do the research. Staff wouldn't be, in my thought, going about trying to obtain some state grant or funding mechanism for the purchase, right? But staff could look into what it might take, I guess, right? But pursuing that and looking into it to me are two different tasks, right? And
Yeah.
I personally am not necessarily wanting to task staff with the pursuit of that, but looking at it, investigating options is okay.
And who would be funding that? I'm just curious. That would be funded from the state, or we don't know, right? That would be something to research. Correct. Okay.
Debbie, this is Steve Alexander again. I believe there's other states that actually are getting state funding or providing state funding, or there may be federal funding involved for some of these mitigation programs. So I think it's something that needs to be looked into.
Okay. Good point. Any other comments before we vote? Okay, Mr. Perkins, could you take a roll call vote, please?
Yes, yes, of course, Chairman King. Mr. Federle,
Aye. Yes.
Mr. Schrader, we'll circle back to Tony. Ms. Morrison,
Aye.
Mr. Alexander,
Yes.
Mr. Schrader, are you able to unmute and respond?
Aye.
And lastly, Chairman Debbie King, how do you vote?
I vote aye.
So there are 5 in attendance voting today, all voted in favor, so the motion passes unanimously.
Thank you. Do you mind reading that back to us, Mike? Just
Yes, ma'am. As
Okay.
I have recorded it, listening to what Mr. Alexander said with some help from a couple of other committee members, the motion is to make a recommendation to the TWI Board of Directors that the association staff be tasked with reviewing alternative opening protections, primarily on older homes that are insured by TWIA, and in particular to review issues that involve the cost of those construction items and savings associated with that. Secondly, payback period for the construction work, claim loss reduction, which I think may go into the savings. And lastly, to investigate options for governmental assistance to help with the cost of upgrading the homes.
Thank you. Thanks, Mike. Okay, everyone. So we have that recommendation going to the board. Regarding any of the other items that we were presented today, is there anything else that we want to recommend?
So the others, Debbie, would be about the roof, is that right?
Well, primarily, I guess that would be the roof age. Do you want to have anything around that? Either, I know there's more work to some of the questions that came up on that. Roof age or roof. So, you know, if a roof is upgraded to the, I'm going to say the IRC code, but maybe there's even a better one, I don't know. When it's replaced with that, is that something we want to recognize with a discount?
So Debbie, you're thinking like, so everything that's on the books is kind of, let me make sure I understand the status quo, right? Except for if a current policyholder upgrades a roof to the building code, to the new building code.
Yes.
Thinking
I guess technically, no, Jim, correct me if I'm wrong, but I think that would be primarily, or a lot of the older homes as well, because a new house obviously has a new roof that's meeting that criteria, and it's already getting the IRC building code credit, which is fairly big. So it would be maybe the older homes that would benefit more, but you know, thought that through totally. I'm saying, but I think that would be something to maybe consider.
If I'm hearing correctly, I think that yes, a credit for upgrading the roof probably would, we could either set it up specifically to do this, or just would in practice apply to older homes that don't already qualify for the new construction credits. And I think that, I'm not sure if I understood Chris's question correctly. I don't think that we could limit this to just people who install new roofs going forward. We would also need to apply the discount to people who have recently upgraded their roofs, for example, and are currently on the books with an old house but a new roof. I think that we would have to apply it to both the current book and to new replacements.
Well, and that would be true for the opening protection as well, right?
Correct.
For any credit.
Yes.
Yeah, thanks for the clarity. And then this one, though, that includes to determine the impact, the benefit, and then what it means to, I guess this is kind of like a revenue neutral situation, right, Jim? Is that right? Is that back to that discussion of if you're going to give a discount in this case, that could be, has to be offset somewhere else?
I would certainly quantify the offset. I think that ultimately, you know, the board can choose to make the filing however it desires. But yes, if I was going to present a credit, I would also present the overall impact on the rates alongside it.
And so this would be also to make that recommendation to look into this, right, to our board. Similar to what we did earlier, right? It would just be a recommendation to the board.
It's just a recommendation to look into it,
Yeah.
not to do it.
I don't see any downside to look into it. I mean, I don't know though, from a staff perspective and point of view, from a prioritization of resources, which is the better, you know, you know, assuming let's just say for grins, everything gets agreed to that goes to the board. If we were to make a motion and pass that today also on the roof, then I guess it would be up to staff to determine a prioritization, or Debbie, would we want to make that recommendation to staff? Because I know they can't do it all at the same time.
Yeah, Chris, thanks for that, because we haven't really gotten into like, how would we actually roll this out? I think it would just be the board would approve that we could look into it. Would you agree with that, Jim, that we're saying we want to look into this, and then the board would say, yes, go ahead and look into this. Then we would meet again and go over the analysis and then decide, yes, this is, we like it. We want to move forward. We want to implement it. And at that time we would say, we just want to do whichever one, or in this order, or at what time period, or we want to do it with a rate filing or not. I mean, as far as like our annual rate filing, all those things we'd have to decide.
Yeah, I'm just wondering even if staff has the resources to do multiple analysis at the same time, or is that going to be a prioritization?
So
it probably is a little bit more efficient to do them both at the same time, knowing that would extend the total process a little bit, because I think a lot of the modeling work, for example, I mean, if we're going to be doing modeling for one of these, we could probably also incorporate the other at the same time. Or, you know, if we're researching potential governmental assistance, that work will be easily can be broadened to include either roofs or exterior openings, rather than having to do it twice, once for each, that kind of thing. If the board, you know, we normally model our exposures towards the end of the year, and use those model results the following year for our rate making. So I think that this is the kind of analysis that lends itself to be done towards the beginning of the year and into the spring. I think that we can certainly begin the process and touch base then to see if it makes sense to have something ready to incorporate in the annual rate filing, or to do it separately. I think, Debbie, as you mentioned.
I don't know who's driving the slides, but can you go back to that slide that talked about the roof review? That was it.
All right, I think
One more.
the roofs would be go forward.
Right there. Okay, so I'll make a motion to refer to the board, asking staff to analyze, I guess it would be a rating factor for roof age. Is that the way we would say that?
So I started talking about a rating factor for roof age. I think that the conversation may have ended up with a retrofit credit for replacing the roof.
Okay.
It's a little bit of 6 of one and half dozen of the other, but it may make a difference to the board how we phrase it. I'm happy to do either way.
So the recommendation would be to conduct analysis of retrofit roof credit. Is that right?
That sounds good to me.
And Jim, we could decide that later, right? What kind of credit it should be if we just did the work. Like if you had this roof age by the age of the home, or so you could tease out the age of the home and the building code credit and the roof age, get all that kind of bucketed a little bit so that we could see the results. Then it might decide if it's the retrofit. I don't know. We could decide.
Sure.
If we say retrofit credit, would that limit us to that? We might want to do it differently. I'm just saying that we don't have to put that word in there, right?
Yes, I think if Chris is amenable to wording the motion more vaguely to, I'm trying to copy Mike's words that he read out, recommending to the board that staff be directed to review roof replacement, maybe, and its impact, the cost to install, the potential savings, the payback period. I mean, we could probably just dovetail the wording of the prior motion if that is.
Well, if I may, I could take a shot. I think I understand the essence of what Ms. Morrison is moving with help from Debbie and Jim. Carice, would you like me to take a crack at reading what I think your motion is?
By all means.
I think that Ms. Morrison's motion is essentially as follows: for the committee to recommend to the TWIA board to task the TWIA staff with research and analysis regarding whether and to what extent new retrofit credits should be made available for roof replacement and upgrades.
That would be fine.
I'm comfortable with that motion. Is that, Jim, Debbie, that's in line with what you were?
I think that's fine. I think it's
Okay.
fine the way it's worded.
This is Steve Alexander. I know part of upgrade of a roof is secondary water resistance. I think we should include that language in the motion.
If it's up to the IRC code, Jim, does that imply, you know, that it's got all those various characteristics that we want to include? I mean, I'm trying to imply, you know, in that roof replacement, we want it being done to the current code, right? Does that solve the problem, Steve? Or?
I'm not sure if secondary water
sure
resistance is included in the current code.
I'm not sure.
But that's something that Florida gives the credit for.
Okay, maybe it's separate.
So we should include that in this analysis then for secondary water resistance. Does that track for what you understand?
It may be difficult to document that if it's not information already incorporated in the WPI8s. If, for example, or to the extent that it's not part of the existing building code compliance process, I don't think that we're going to have a good way of knowing whether or not secondary water protection has been installed or implemented in a way to inspect for it. Because I think that my intent at least was to rely on the WPA process for the documentation for these kinds of things.
Can you
This is Chandra. So currently part of the WPI8 process, there is not a way to identify a secondary water barrier on the paperwork. The only thing that I know of right now that is acknowledged as a secondary water barrier system is the Fortified program through IVHS. So I would say if they have an IVHS certification, then they would fall into that category. But for a normal TDI compliant roof, it would not, unless there was some additional information that the insured provided and that it was validated in some way, which would be very difficult and almost impossible on staff's behalf.
Thank you, Chandra. So, but with the WPI8, we do know that it's at the current building code level for a roof replacement. Would that be right?
Well, we know the date that the WP8 was issued, the code to which the building has been certified. And
Okay.
so it's, you know, again, it's not just going forward, it's also going backward. You know, we'll be able to identify homes that replaced their roof to the 2015 code.
Okay.
So this is Steve Alexander again. It seems to me that we could require or analyze bringing a roof up to the highest possible standards. Not sure what those are because I'm not a building inspector engineer, but I mean, can we look at different standards and one of them would be the highest possible standard?
So
can we have one or more options?
I would definitely want to do that as part of this. I think that at least at first glance, I feel like that we may be limited by the secondary modifiers input into the models. You know, we don't have this experience for our own historical experience. We don't have this information for our historical experience, and so if we're going to try and quantify the potential impact of a particular mitigation feature, the best tool, perhaps the only tool that I'm aware of that we could use to do that is the models. And so, looking at the impact of different building codes and the potential savings of upgrading to that code will involve, I think, someone sitting down who is technically familiar with the code and what is required to meet that code, and someone who is technically familiar with the model and how to interpret that in a way that the model can accept. And I think it's a very useful process, but it's a fairly complicated process. The models accept age of roof, and so it may be a little bit oversimplified, but that's something that we can put into the models and get back as results, and we can say that the average annual loss for a 5-year roof is this % more than a 1-year roof. It's fairly easy. It can be done fairly quickly and without a lot of additional cost. I think the more precise, the more detailed we try to get, the more time and expense that may be involved in getting good information back.
Steve Alexander again. I think it's good to use the models, but I think it's also would be beneficial to look outside the models to see what other information is available, and include that in the study. We don't have to be totally precise. I think we need to get a broad spectrum of possibilities included in the analysis without focusing too much on quantitative analysis.
If there's anything available, I guess, Jim, I'm sure you'll bring
Happy
it.
to look.
Yeah, okay. Okay, do we have a motion or not?
I made it some time ago, I think.
You made it, yeah, okay. Mr. Perkins, could you read that to us again so can.
Mike, you're muted.
I'm sorry. At this point, I think the motion was made by Ms. Morrison, and Mr. Alexander had suggested an amendment to it at the end to add roughly, I think the words are, including secondary water resistance if that data is available.
Okay.
And so I'll read the motion as I read it. I guess Ms. Morrison could think about whether she's comfortable adding that or not at the end, and we don't have a second yet. So the motion is as follows. To recommend to the TWI board to task TWI staff with research and analysis regarding whether and to what extent new retrofit credits should be made available for roof replacement upgrades, and then potential additional clause, including secondary water resistance if such data is available.
Yeah, I'm okay amending that, but based on what I heard, to accept that amendment, but based on what I heard, we don't think there's much data available. Is that right? But yet I'm okay with the amendment. So.
Okay. And so we don't as yet have a second, although I suspect Mr. Alexander might be willing to second it.
Well, let me just say this. Can we modify that to say data or information available rather than just data?
Data or information?
Yes.
Okay, I may have to ask you to talk to me offline later. I thought those words were synonyms. Okay, yes, sir. Including secondary water assistance if such data or information is available.
Yes.
Yeah, I'm good.
Okay, so that's a motion by Ms. Morrison, and it's been seconded by Mr. Alexander.
Okay, Mr. Perkins, could you do a roll call vote for us, please?
Yes, Madam Chair. Did you want to inquire or offer to have any debate or discussion before the vote on the motion?
Oh, sorry, I thought we were doing that. Okay, is there anything more that we would like to bring up before we vote on this?
Then if not, you have called for the vote, and I will call the roll as we did earlier.
Okay.
Mr. Futterleib.
Aye.
Mr. Schrader.
Aye.
Ms. Morrison,
Aye.
Mr. Alexander,
Yes.
Chairman Debbie King.
Aye.
So we have 5 votes in favor, no votes against. The motion passes unanimously.
Okay. Thank you. Thank you, everyone. But we have two recommendations just to add. I'm not sure we have anything more to add, but does anyone want to pursue anything differently from what we've discussed?
No, I'm good with it, Debbie. The only thing that's left was the first item that Jim brought up, but I don't think we're ready to do anything about that one, right? That's the looking at the existing credits. Right, that was the first topic.
That was the first, yeah. Yeah, it appears, I know we went by that page first, so we didn't really talk about it much, but the credit for the WRC is very similar to the IRC. I think it was 2 points different. It's a very similar credit. That apparently has maybe not exactly, not panning out at this point in time, as these homes are older now, or the building code is older. Maybe that's something we could take up at a different time. As we said, maybe too many changes at once can be disruptive.
Yeah, that's my thought. I don't know if it's worth still presenting that to the board, just that chart. I don't know, Debbie. I mean, not that we have action on it, but it is information that Jim presented to us. So
we could present the information. We aren't recommending an action.
Right. Because I think that chart that he showed where we show the credits are in line in some cases and not necessarily in other cases is information that the board may like to see.
Yeah. One question on that, Jim. When did the IRC come into effect, that credit? What year?
So the IRC building codes, plural, first became effective on construction starting in 2003. TDI has modified and upgraded those codes generally every 2 or 3 years since then. And so it may be a little bit of a misnomer thinking of them as a single code. It's more of an evolving set of codes.
Okay. Just a question for Mike Perkins, please. This would not be a recommendation for action to the board, just information. Would that be appropriate for our committee to do that based on what we were tasked to do?
I think that staff would probably be comfortable, and certainly as the lawyer advising the group, with just letting Mr. Murphy kind of follow your wishes in terms of what information he presents to the board at the December meeting. So I suspect that he probably has enough input from you to follow your guidance there without any formal action by the committee.
And so no motion on that?
Yes, ma'am. I think I'm comfortable with that if Jim is.
Okay, then we would just ask you, Jim, to inform the board of, that finding. And we're not taking action now, but we want them just to be aware.
I'm happy to.
Okay. All right. Anything more before we adjourn from anyone? No. Just to let everyone know, our next meeting is just in a couple of weeks. What's the date of that, Jim? November
2nd, I believe.
2nd. Okay. At that time, we will be reviewing our candidates, our RFP candidates for a reinsurance broker, and also now our new role as the CAT modeler. So agenda will be coming out on that next week sometime. Should let you know how that's going to, how that will be presented. Any other comments before we adjourn? No. Thank you for everyone's time today. It was a really good discussion, and I appreciate all the input we had and the public comment, and which actually I think helped us from the public comment. So thank you very much. And with that, do I have a motion to adjourn?
So moved. Thank you, Debbie. Good job.
Thanks, Chris. A second?
Second.
Thanks, Tony. Okay, I'm sure we'll all approve that. So meeting's adjourned. See you in 2 weeks.
Thank you.
Thank you. Bye-bye.
Thanks. Bye.